What is going on? Welcome back to Financial Journey. So today I want to talk to you on ChargePoint. This stock gets better and better. I want to go over some of the current data points, talk on what is prompting this sell-off, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So currently it is down 35.14%, 71.82 million shares being traded, 19.5 is the average. And it is to note there hasn't been any real substantial spikes up, so that does mean that the market feels that this is justified. And of course, what is prompting this massive sell-off is this right here. So ChargePoint did provide certain preliminary third quarter financial results, as well as schedule the earnings call on December the 6th, or for December the 6th, 2023. And within here, they do also, on a side note, effective today, well, I guess essentially yesterday afternoon or whatever else, they do have a new CEO and also a new CFO. Massive red flags. That is just insane. So of course, part of the sell-off today, I'm sure, is because of the greatness associated to that. Because whenever there is a CEO that just abruptly leaves, that usually shows something bigger at play. So maybe more skeletons might be coming out of the closet during the upcoming earnings. So I feel like that people are anticipating the worst at this stage. So CFO and CEO, not necessarily the best. But based on this, they did give estimates for their revenue for Q3 between 108 to 113 million, compared to 150 to 165 million as previously expected. That is insane. That literally could not get any worse. And I did do videos in the past on how potentially they might pull a Virgin Galactic and actually raise their guidance and overdo their revenue, but this is the worst case scenario that could have happened. As well, looking at the cash. So as of October 31st, 2023, cash and cash equivalents, they did have roughly around 397 million. Last quarter, they did have around 233.5 million. So just for face value, if someone looked at that, they're like, oh, well, that's kind of good. But they also did 232 million at the market share offering. So in reality, if you kind of factor everything out, so subtract this from this, and obviously factor what they previously had, they burnt through almost about 73 million or something like that, close to that. So they are burning through cash at a significantly faster rate than what was even previously anticipated. So this is the worst case scenario that could happen for this company, and analysts are absolutely shitting all over it today. So you do see a lot of downgrades, a lot of $2 price targets, $5, which I think even $5 is very conservative. But keep in mind, when they're giving ratings, it's for roughly about 1 year out. So a lot of people that did buy in during this downtrend, maybe at 10, 9, or whatever else, it has gone significantly worse. But some of these analysts are fairly okay as well. So you do have Colin with Oppenheimer, just gave a downgrade, no price prediction, but 50% success rating. You do have Craig, he's the one that gave a $2 price target from Roth MKM, but still a lot of, actually I've never seen this before, a 0% success rating from Thomas Merrick. I think that must be a glitch, obviously, but let me know your thoughts. Do you think that analysts are kind of overreacting to this, or what's your take on this? And also give yourself a shout out if you have been buying, selling, holding, what you've been doing. And also on a side note, if you are looking for a lot of good compiled information such as analyst ratings, analyst forecasts for upcoming earnings, take a look at Interactive Brokers for all of this to be completely free. Link in the description below and also the comments. So I also do anticipate probably some changes for the upcoming earnings per share and revenue, because obviously with analysts giving updates on their ratings, they're also going to be changing their estimates on these two topics right here. So I do fear that things might get very, very bad. And while I still do have that up here, and before analysts do change it, it was anticipated that ultimately, like either Q1 2025 or Q4 2024, this company was actually going to be profitable. But because of this, like the numbers that they put out right here is just going to cause a massive domino effect and push them back probably a good 2 or 3 quarters from profitability. So this definitely is no bueno to me. Obviously, I'm not a financial advisor, so you guys always do your own due diligence. And it is to note though that the 150 million revolving credit, which is relatively small, it's only good for almost about a quarter and a half of their expenses, it is currently undrawn. So that's kind of a positive, I don't know, out of anything. But from here, I'll go over some data points from today just to give you an overview of ultimately what it's saying. Starting off on Ortex with shorts. And as I've said in the past, I'm just using this as a benchmark, not here to say it's going to be a squeeze play, but shorts are currently increasing about 1.56 million shares, 21.76% of the free floats being shorted, 70.74 million shares overall are being shorted, and cost to borrow average is roughly around 2.31%. So very small when it comes down to that, and through Interactive Broker, short availability does indicate that there's around almost about 5 million shares available to be shorted. So I do anticipate once the broader market kind of settles where ChargePoint's going to land, shorts are probably going to take control again and cause it to go down significantly. Hopefully not, but at these numbers that came out and just the whole CEO, CFO change, absolutely horrible. But when it comes down to options, let's talk on what they are saying. So we are about to head into power hour in about 30 minutes, give or take. And so far there's been $1.14 million in calls being purchased versus 4.31 million in puts. So based on this information and it making a new 52-week and all-time low today, it is anticipated to continue to trend down. Looking at the call options though, for the volume, it is anticipated by the end of next week to be sub, oddly enough, based on this at least, sub $2. So far that $2 support has been holding, but based on this information, even the optimistic individuals aren't really anticipating that. Based on puts, it is anticipated to be sub $1.50. So all of this just got massively bearish very, very fast. But keep in mind, options activity is just more of a sentiment. It doesn't necessarily move the stock price. But let's talk on some technicals. So right now it is at $2.04. A new 52-week and all-time low was created at $1.95. So as it stands, it is trading between this S2 and this S1. So $1.69 is going to be the next strong support. Vice versa, $2.31 is going to be that next strong resistance. So even if there is a little bit more of a bump up going into next week or starting on Monday, I don't see any justifying reason for it to be above 230. So once again, it might most likely trend up, bounce off of that, and test this $1.69. So not the best scenario overall. And based on this, number of retail investors are getting out today. It did transition from the higher to the lower percentile of the Bollinger Band, and this is a massive inversion, so it went very bearish. So red line above the black. So based on everything, I do anticipate a further downtrend from here after maybe a nice initial spike up to around probably the 220. But like I said, based on these results that did come out, this is absolutely horrible. And it does also signal that there's a lot more skeletons in the closet that most likely will come out during the upcoming earnings on December the 6th, 2023. So let me know your thoughts on ChargePoint. Have you been buying? Have you been selling? What have you been doing? Today, I did actually sell some puts on ChargePoint at the $2 strike price just to collect some easy premium because I don't really see it breaking below that because of strong support today. But I think outside of that though, anything optimistic on ChargePoint is just going to be too risky for me. But let me know your thoughts. Don't forget to hit that thumbs up and subscribe. And even though ChargePoint does whatever the hell it's been doing, crazy stuff, take advantage of this promo. With Moomoo, just sign up for an account with Moomoo, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000, plus you get 1 free share of SoFi. So for $100, you get 6 free stocks, plus any cash that you do have in this account, you're going to be earning 5.1% APY. So this is one of the best deals on the market. Link in the description below and also the comments, only up until November the 20th. So because ChargePoint's doing whatever the hell it wants, take advantage of some free shares while you can. Link in the description below and also the comments. With all that said, I appreciate all of you watching.